Hi guys, I'm just going to give the other attendees some time to enter the room and then we'll kick things off. Okay, let's get it going. Okay, so look, welcome to today's presentation. Look, as you can see on the main slide, the main focus is on trend lines, and it's ultimately a beginner's guide. So from me and the FP Markets team, I want to thank you all for taking the time out of your schedules to be with us. Hopefully, you will. This will be of some use, and you'll be and you'll look at trend lines in a somewhat different light. And this is a method that's firmly placed under the umbrella of technical analysis. Now, I've seen many traders use trend lines, so I know there's interest in the technique, hence why the team here thought a beginner presentation might be a good idea. As I've underlined in previous webinars, every single trader at one point in time was new to all technical concepts, so where everything seemed overwhelming. So please feel free to ask questions and I'll try to provide clear answers. If best, if you can save the questions to the end, until the end, this will help disrupt the flow. Though if it's a question that's relating to the slide or the chart, please do ask away and I'll try and clear it up as I go. Recordings of the presentation can also be found either through the FP Markets website or on FPM's YouTube channel. Now, this enables you to watch the session at your leisure, pausing to take notes if needed. Given I do not see any activity in the chat box right now, I assume we can all see the welcome slide and hear me loud and clear. If not, please let me know and I will try and get the support team to assist. Now, really quickly, just let me briefly go over the disclaimer. So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. Look, guys, really, I'm not going to read all of the text, but really what this means is this is a presentation designed for educational purposes, and it's not investment advice. Now, just really quickly, for anyone that's unaware of who I am, my name's Aaron Hill, and I'm the technical analyst for FP Markets. I've been involved in the financial markets for more than 12 years now. I'm also a CMT, so a chartered market technician. On the back of completing CMT level 2, I also received the CFTe qualification. I've also enrolled on the Chartered Financial Analyst course. I'm a candidate for level 1. And look, for me personally, in terms of my trading, I specialize in price action, Fibonacci, the relative strength index, and chart psychology. As for the presentation topics, we're looking at what a trend line is and its use for us as traders and investors. So in line with explaining what a trend line is, we'll also take a look at the correct, the textbook way to apply a trend line. I will also try to squeeze in some other ways traders use trend lines, albeit not considered textbook approaches. And then similar to my previous presentations where I focus on price action, I will look at multi-timeframe trendline studies. And this is where we combine our knowledge on with trend lines and look at multiple timeframes. Following this, we'll look at taking on some questions. Also, please do feel free to go ahead and send questions to me and the research team if you feel the question warrants, more of a detailed explanation beyond the scope of this presentation. You can send any questions or requests for future webinars as well to either support@fpmarkets.com or marketanalyst@fpmarkets.com. So without further ado, let's dive into what a trend line is. So look, a trend line's main purpose, as its name implies, is to define a trend and help identify when a trend may be changing. There's actually a number of ways to determine an uptrend or downtrend aside from the textbook approach. So other trend lines used are referred to as accelerating or decelerating trend lines. Now, these are used by many traders when the market is in a state of a speculative bubble or market panic. So it's a way of following the markets when they accelerate or decelerate, so either to the upside or to the downside. But be aware that these trend lines are particularly steep and are more prone to snapping. I will show a few of these examples on the charts shortly. Traders also use moving averages to define a trend. Now, the 200-day simple moving average is a prime example of this and is often used to define a trend. Traders also use, you may have heard this, traders also use a combination of the 200-day simple moving average and the 50-day simple moving average to form what's known as a golden cross. So a golden cross means when the 50-day simple moving average crosses above the 200-day simple moving average to indicate a bullish environment, a potential long-term bullish environment. And death crosses. Now, a death cross is when the 50-day simple moving average crosses below the 200-day simple moving average. And as I'm sure you can imagine, it indicates a market that's potentially gearing up for a longer-term downtrend. Other examples of using trend lines, of course, are channels. Now, I do use these personally, both ascending and descending versions. Another way is maybe using the Andrews pitchfork measurement. Now, again, fan lines are also another alternative, and also Elliott wave. Now, I do not really use Andrews pitchfork in my trading, or even Gann's work, or even Elliott wave. But I do know a lot of traders that do focus on Elliott wave trading. It's just not really appealed to me in that sense. Point and figure charts are also use trend lines. Although I've never used point and figure charts to generate trading ideas, I believe these trend lines have to be drawn at 45 degrees. Now, regular names here will probably recognize this slide which was used in a previous technical analysis presentation. For those who missed it, what I was doing here is simply highlighting the peaks and troughs that form a trend on charts. So this is really just to try and give newer traders an idea of what a trend is before we move on to what a trend line is. So the slide displays an upward trend or an uptrend, which occurs when price action produces higher highs and higher lows. So what I should have really said is produces consecutive higher highs and higher lows. So we have higher highs forming across the top of the price action and higher lows forming across the bottom. Now, to help determine now look, we can visually inspect this, right? So forget the slide I just showed there, but look, visually we can see that this is an uptrend, right? We don't really need to be a rocket scientist to see that, but to help us visually see this, we do apply trend lines. As you can see here, the trend line is determining the uptrend, which is always drawn across the lowest prices, so the higher lows in terms of an uptrend. Important points to note are that is a trend line is considered valid after 2 tests. So as you can see here, we have the first point of contact here and the second point of contact here. Some traders actually prefer 3 tests to confirm a trend line, and that's absolutely fine. So what that means is they would require to see this position, this point of contact emerge as well to determine a valid trend line. Now, another important point to keep in mind when applying trend lines is the line should not cut through price action. And ideally, they should form from extreme points. Now, while I will touch on this later on the charts, I just want to give you a basic idea. So what I mean is the trend line. So if we form a trend line from this point here, it cannot cut through previous price action to the past in the past. Also, when I say extreme points, what I mean is, so imagine price has formed almost a downtrend, I guess, a decisive down move, and this is an extreme point, right? So we know this is an extreme point because it's broken previous lower highs at this point here. Right. So with that in mind. So to help, the same can be said for a downtrend. So a downtrend, as you can see on the slide, is made up of consecutive lower highs and consecutive lower lows. It's exactly the same as the uptrend. It's just the mirror opposite. The terminology is slightly different as well. Now, as you can see here, the lower highs are formed across the top of the price movement, and lower lows are formed across the bottom. And look, again, we don't need to be rocket scientists to see that this is a downward-facing market. But to help determine the trend, we can use our trusty trend line. In the same way as we did with the trend line support for an uptrend, we can use a trend line resistance for a downtrend. Again, remember, I need at least 2 points of contact. So my first point of contact would be here, and my second point of contact would be here. Some traders, again, would require a third point of contact to confirm a valid trend line. Now, guys, do we have any questions on anything I've shown so far? If so, please do let me know, and I'll try and answer them on the slide before we get to the live charts. Right. So next up, we have the DollarCAD daily chart, which shows two forms of downtrend lines. Now, the first trend, so look, as you can see, this is an extreme point, right? So we have a considerable up move and we have an extreme point. So once price starts showing signs of weakening, we can then apply our trend line. For me, I would have started with this, the extreme high, and drawn my trend line to this point, because there's no point drawing to these areas here, right? Because we're drawing it. Let me annotate this, just bear with me. Okay, so there's no point drawing our trend line to this point here, and then we know it's already failed because price has come above this trend line, and the same goes for this area here. Oh, God, sorry guys, let me just delete this. It's ridiculous drawings there. Let me try and find a straight. There we go. That's better. So we can draw a trend line like this, right? So we can draw from that extreme point to this point. And then, as you can see, we did break higher, right? So we know if we've let all this price action take shape, there's 0 point in applying these trend lines. And the same goes for this point here. From that extreme to this high there, we know that there's no point because it has little relevance to us as traders now. So we know our next step is to use this point here. As you can see, I've drawn it there. And it makes sense, right? So this is the next high. And then we extend that to the downside. And you can see price did So when do we draw this trend line? When do we draw this green trend line? So for me personally, I would always look for price to break the lower low. Remember, in the trend, the downtrend is formed of lower lows and lower highs. So once we've broken this lower low, I know we can now apply a trend line and project possible resistance from the downtrend line, and also help structure the chart to say that, yes, we are in a downtrend, and give us a clearer visualization. So as you can see, we did test this area, and we continue to test it. Look, we tested it here, here, and there again, until we broke, and we even tested it here again. So this is a downtrend line, or a trend line resistance. Now, we broke higher, right? So let me get rid of these images, these drawings. Now, we broke higher at this point here. Now, what does this tell us? Now, if we break this trend line resistance, this tells us, provides a warning, provides a red flag that the downtrend, that the downside bias here, at this point here, all of this data is potentially changing to an upside bias. Okay, and we did see that price did continue higher for a bit, right? It struggled at this point here. And that really should have been a clear sign that look, the sellers were looking to come in strong. Look, if you break a trend line, you want to see decisive price movement, and we've not seen that. So once price broke the next lower low, the most immediate lower low at this point here, we broke that here, we know we can now apply a different kind of trend line. Okay, so logic tells us we can start from this point again, the extreme, and extend to the next logical lower high, which I've done. And we only can apply that after we've broken this lower low. So now we've extended the trend line resistance to this point, to that point. 2 points of contact, guys. 1, 2, and now we've extended it, and look what happened. Price dropped, price continued lower, and eventually tested this trend line and tested this trend line again. Now, this is one of the key uses of trend lines, of course, is not only can it determine a trend, can it help visualize a trend, it can also provide support and resistance. And in this case, as you can see, we had resistance at this trend line here and here and here, as well as down here. Now, once price breaks up above this trend line, we get the same signal as here, and we have to work with what price is telling us. So this is what we did in this scenario at this point here. We worked with what price was telling us. So without breaking this lower low at this point here, we cannot draw another trend, a trend line, because we have no trend to work with at the moment, right? All we have is the break of this trend line at this point, and we are still in a potential upside environment until we break the lower low, which confirms a trend. Let me just go back to the slide. 1 second. Let me just clear all drawings. Let me just go back to the slide just to reiterate this point. Here. Sorry, it wasn't there. It was here. So look, the trend line, remember, the trend is in action. Once we break this trend line, that's a warning sign, okay? That's a warning sign that this uptrend may be weakening. But it's only until we break this lower low as well that we can draw a, let me just annotate this, that would be easier. So it's only once we break this trend line, this is the first sign, this is a first warning sign for me. Once we break this, so this is the first warning sign that the trend is potentially weakening. Once or if we break below this lower, this higher low, that's when we can apply a new trend line, right? A potential new trend line, a trend line resistance with the higher lows and lower lows. I hope this makes sense. I hope what I'm showing is clear. Again, guys, any questions, please do let me know, and I'll cover them as I go on these slides. Okay, so we've covered this chart. We're pretty clear with this. Next up, we have the Aussie US dollar on the daily chart. as you can see here, there were a number of false starts, shall we say, in terms of trend line structure, as you can see at this point here. But it seems we eventually settled for this trend line here. Again, look, these are not up-to-date charts. These are prior to literally when the pandemic was hitting. So these are pretty outdated charts now, but it's just really to get the point across. So just to highlight this, this is our extreme point, right? So we start with this higher low at this point here, and then we extend our trend line. As you can see, we did get it was hardly a reaction. It was very modest, but then we broke lower. So this trend line for me now is obsolete, so it can be erased. Then we go back to our extreme, and then we work with what's next. So we know we break. Let me draw this on 1 second. So let me just start this again. So extreme point, first point of contact, the higher low, pitiful reaction, and we've broken below the trend line. So this trend line is now obsolete. Now, once we break this higher high, we can now look at drawing. So we broke that higher high at this point here. We can now look at drawing the next trend line. So you may be wondering, why did I not draw my trend line to these to this higher low at this point here? Well, the reason is because, look, it pretty much told me not to draw it there, right? Because price would have broken it already. It's a waste of time really drawing it. We can only draw it when price forms this higher low at this point here and rallies higher and breaks further to the upside. So now we have another trend line and we work with that. Second point of contact, first point of contact. Then we have our reactions here. Look at these reactions. Another reaction here, albeit not great, but now we break this trend line. Okay, we break this trend line support. Now we note the higher high. Now we've broken this higher high at this point. So both of these trend lines are now obsolete for me. Now we've broken the broken to higher highs. Now what do? We now look for further trend lines to place. Now we could, as we've broken this, we could now draw our trend line to say here, but look, pretty much offers you nothing. Would you agree? I mean, look, we've broken to the higher high. We can draw it to the next higher low at this point here. Now, guys, look, we do not draw our trend lines from these points here. This is not a trend line, because what does it do? It cuts through price. It's not showing us a trend. Okay. Let me just delete that. That was a point I made at the beginning of the presentation in regards to textbook trend lines. So look, we've drawn the trend line, we've come below it, but look, we did actually test this area as resistance, and it produced, this is a daily time frame, so it produced a reasonably modest move to the downside from the trend line support term resistance on the retest, right? Okay, so we continue higher. So we know that this is the next higher low to work with, this point here. Again, we break it. Things are not looking good for the buyers at this point. We're continually breaking trend lines, and then we forcefully. So look, all of this gives us all of this here really tells us that the buyers are really not doing well at this point. Despite this move higher, they're really not doing well at this point because of the trend lines that are being continually breached. So, and this is followed through with a move to the downside, a considerable move to the downside. And eventually we bottom at this point here. So what price is telling us is to now focus on this higher low here, but only once we've broken this higher high. So once we've broken this higher high at this point here and formed highs, we can now draw the trend line from the extreme, point 1, point 2, and what happens? You get a nice reaction off of this trend line at this point here. Okay, you could, if you really wanted to be drill down to the lower data, you could actually start drawing a trend line from this point here as well, and using all these small higher lows at these points here, because this is a trend line, right? Because it does not cut through any price action in the past, and we formed lower lows, lower highs, lower lows, lower highs. We formed a downtrend. Now we're in an uptrend, okay? once we've broken this higher low, this higher high, we're now in an uptrend. Okay, so we can use a trend line at that point. Whoops, at that point there. Okay, so are there any questions on this chart? It's very, very quiet at the moment, so I assume we're all good. Look, so while, let me just delete this. Okay, so look, while trend lines are ultimately designed to underline to underline trend in a market, they can be used as I've said already, they can be used as support and resistance. I guess you could say ascending and descending support and resistance. And this is a particularly impressive method on the pound US dollar currency pair using textbook trend lines, which I will show shortly. Now, during my with my experience looking at the charts, I can I do favor the pound dollar for trend line studies. They just really, really react well to textbook trend lines. I don't know why, but it's just through my back testing and things like that, and viewing the charts for more than 12 years now, you get to see these kind of patterns. Look, Christoph, I think that's your name, Christoph. I'm not sure what language you're writing this in, but I cannot understand, unfortunately. So if you can maybe retype this in English, I can reply. Look, it's worth noting. It is worth noting that, like everything in technical analysis, trend lines are not an exact science. They will hold price at times and also fail to hold price in other situations. And at times, we'll also experience nasty whipsaws with price, slamming below our trend line support, for example, and simply rallying back in the original direction, which I'm sure we've all experienced in the past. So look, in addition to textbook concepts, I will also very shortly highlight when a trend line is breached, it can actually serve as a support and resistance. Now, instead of using slides, I will switch things over to my to the charts. Hi, Uga. I'm sorry if that's how you pronounce your name. Dollar go up next year. I think dollar's going up right now. If you look at the dollar index, it's insane right now. Let me just switch over to the charts, and we'll work from there. Okay. Okay, guys, can you just confirm Y or N? Y for yes, N for no, that you can see my charts? That would be fantastic, because otherwise I am not. I'll be talking to myself, and yeah, there we go. Thanks, James. Excellent. Thanks, guys. Right. So, look, with the understanding of a trend line, now we hopefully understand how to apply a trend line. And knowing that trend lines can offer support and resistance, multi-time frame trend studies is also something we can look into. However, do remember the market is fractal. So in one time frame, so the H1 time frame, for example, may have a trend in play, though on another time frame, say the daily time frame, that may be range bound. So we have to be aware of this. Now, with multi-time frame analysis, I work with this every single day in my daily markets analysis. If you're interested in this, please do go ahead and pay a visit to the Traders Hub. Not only do we have my report, we also have a weekly report, technical report from Gary Burton, and we also have a fundamental analyst working with us as well. So do pay that a visit if you're interested. Right. So right on the chart, we have the pound US dollar. Now I do have the RSI applied. I will explain that shortly, but I wanted to start with this chart here. Now, I've chose MT4 because I believe most of us will be working with MT4 or MT5. I generally do like to use TradingView for my technical drawings, but as most of us will probably be using the MetaTrader platforms, I thought I would use this. Now, the first point I really wanted to get across is in the, I think the default for the trendline properties. If you click on the, so right-click the chart, sorry, right-click the trend line and go to trendline properties. Now, you have common, but go to head over to the parameters, and if you have this checked, the ray checked, what it does is it extends it. Now, this can be annoying for some of us. Now, if you don't want this, quite simply right-click trendline properties and uncheck ray, and that will give you the flexibility to apply your trend lines as you Oh, thank you, Gerald. Thank you. You obviously speak the same language. So look, appears to be asking, when does overbought, I assume, trend change? Hopefully this demonstration will help you. Thank you, James. Excellent. Thanks, guys. All right, I'll try and get to that in a minute, but hopefully what I show here will demonstrate this. Right, so look, on the pound H1 chart, this is back in January of 2022. So look, we have a clear move up, right? Forget this, but we don't forget this, but do take this into consideration. We have a clear upside move, right? Now, at this point here, now imagine we don't have any data beyond here. So the current price is here. Now, we know by moving this forward, price did break lower. We broke to a lower low. Now we can look at potentially applying a trend line, right? So we can look at potentially applying a trend line. Now, if we use the extreme at this point here, and we draw a trend line there, it's just unrealistic, right? Come on, it's really unrealistic. And you cannot expect price to respect this after all of this upside movement. Of course it can, but let's be realistic. We want them to look almost symmetrical to a point and make sense. This may be where the chart time and your experience comes into play. Now, for me, I would then move to the next extreme point here. So this is the first extreme, the initial extreme. Then I would just simply move to the next higher, a lower high. Okay, and that's what I've done. So I've simply drawn my trend line from this point now to the next point of contact, 2 points of contact, and look what happens. We get a nice reaction from this area and a subsequent follow through to the downside. Very basic, but look, the pound US dollar is very, very receptive to trend line studies. Now, what I was saying about be realistic, this is a nice example here. Here we can see, right, we've drawn a trend line. Let's ignore the previous price action for now, but let's imagine this is a reasonably extreme point. And we first point of contact, second point of contact, and look what happens. Price extends. So what happens is price deviates from its normal, its symmetrical formation, and it's extended higher, right? So look, does this really make sense anymore? Does this trend line really make sense anymore if we draw it from there? Look, we did get a mild reaction, albeit, but does it really make sense anymore? Because now we're looking at a downtrend, right? So we have the bearish sentiment against our trend line support, which really a trend line is designed to work in favor of the trend. So if price moved to this point here and then come down to test this area of trend line support, this would have been a very high probability area of support, but it didn't. Okay, that's the issue. Now, just to really confuse things, some traders also use the candle bodies. So they almost create a buffer. Let me just redraw this so it makes sense. So what they do is instead of using one, just bear with me, guys. Instead of using just the extremes of the candles, you can also use the candle bodies. Now, as you can see here, I've used, well, I should have used the candle. Just imagine that this is the function on the MT4 keeps dragging it to the extremes. But look, imagine I've gone from the candle body there. Let me zoom in to make this easier. So imagine if I went to the candle body at this point here and the candle body there, which I've done. This creates a buffer rather than just using the extremes, so the lower shadows. Just something to bear in mind for if you start working with trendline studies. Now, so look, we have this, we have the down trend line here, and it's pretty symmetrical, right? So it pretty much makes sense. We had a first point of contact, second point of contact, lower low, reaction, lower low, reaction, break. Okay, so here's where multi-time frame analysis can kick into play. Do we have a question? Good question, Roberta. Is it better to use extreme candles or candle bodies? For me, I always use the extremes, to be honest, because even if you use the candle bodies, look, you can, I would certainly say that you could use just as a buffer. What it does is it just gives you an area to work with rather than a definite, an individual line. That's all that's really for. But for me, it's always the extremes. That's how I was taught, and that's how most textbooks do apply trend lines. Hope that answered your question, Roberta. Okay, so look, now just getting back to this, we know we're in a moderate downtrend given the trend line resistance here, reactions, lower lows. But look what happens here. This is the key thing. We are now on the H1 time frame. Do bear this in mind. Now, if I switch to the daily time frame, now let's remember this point here on the 19th of January. Let's move to the daily time frame and let's work out where we are. Now, we now have a daily trend line resistance. Now, this is 24 hours per candle, okay? So we start with the extreme. Look, guys, we can't use this as an extreme. Let's be realistic. It's more of a resistance, right? So this is the extreme. And then we work to this lower high, and then we extend. So what happens here is price breaks above this trend line resistance. Now, what this does is it gives us an indication that buyers are strengthening their grip because we've broken this trend line resistance. So this break here, let me zoom in. Break here indicates that we are potentially heading higher, and we did. You know, continuation buying did occur, but look, we failed to really break. We failed to touch these highs, right? So this isn't a good sign, and that's not a good sign as well. This small candlestick pattern there, which is known as a shooting star, and is a bearish indication. So we have, you know, and the follow through. Let me just go into that in detail, because look, we have some really, really good bearish candlestick formations there. We have the shooting star at this point here, and then following this, we have a textbook bearish engulfing pattern. Now, a bearish engulfing pattern is solely concerned with the bodies of the solely concerned with the real bodies of the candles. So the extremes are not taken into consideration with this. It's just the real bodies. And as you can see, open, close, we've engulfed the previous real body of the shooting star. So we not only have a bearish indication there, we have another bearish indication there, and that followed off with a move to the downside. Now, getting back to the multi-time frame analysis, we know we've broken higher at this point here. Now let's switch back to the H1 time frame and let's see if we can find any opportunities, knowing that we have a daily trend line resistance. Now, given that we've broken, just to really highlight this, given that we've broken above this trend line resistance, this trend line resistance can now become potential support. So trend line resistance turned support. Now let's go back to the H1 time frame and find that area. Let me try and zoom out so I can find it. There we go. So this, let's move this just to avoid confusion. This is the daily trend line resistance at this point here. So this is where we broke higher. And look what happens. Price comes down and tests that daily trend line resistance. Now, if we were short from this H4 trend line resistance, we know we are potentially against bullish flow, right? But given we've analyzed the daily time frames bearish candles, we know this was a pretty good short, right? Even though we did break the trend line resistance. However, this would have produced a sound downside target from any short positions taken from these trend lines, because this is a daily level, right? Okay. And in addition to this, on the H1 time frame, we had an oversold signal on the RSI, which means downside momentum could potentially start slowing, and it did. And I think we had some mild bullish divergence here as well. Right, so the key point here is now we know buyers are potentially going to come in. This was followed by a trend line resistance break on the H1 timeframe. So not only do we have a daily trend line resistance, turn support in play now. Price bounced from this area, took out the H1 trend line resistance. Now, that is strong confluence, strong technical confluence using multi-time frame trend line studies. Daily trend line support in play, buyers come in, break the H1 trend line resistance. Not only did they break the H1 trend line resistance, they retested this H1 trend line resistance, turned support. So this would have been a high probability entry for a short-term trading opportunity. Okay, so I hope you're getting what I'm trying to put across here. It's just having an eye on the overall market in terms of where we are located on different time frames. All right, let me check if there's any questions. Okay, excellent. So no questions. Any questions on this, guys? So look, from when does an overbought trend change? When does an overbought trend change? When the trend line support breaches, and when a trend line support is breached, and we see, so for instance here, and we see a higher low breached subsequent to the trend line support breach. That's how I would answer that. But I hope I've shown this here on the chart with this example. Now, imagine we were long at this point here. We were long, fantastic, great results. We reduced risk to break even, taking partial profits as we go. Okay, end of story. Price reacted lower, and look, we took our profits, and that's the trade over with. So price, what's happened here? Let me just annotate this. What's happened here is, look, now we've broken the lower low, the key lower low at this point here. We know we're in a downtrend, right? So we can now draw another trend line from this extreme to the most recent higher, lower high. Sam, do you find other RSI settings than 14? Look, that's totally up to the trader, to be honest. The RSI, I prefer to use the default period, 14. I find that the most useful, but some traders do prefer to lower the settings to like 10 or 8, and what that will do is increase the sensitivity, so it will give you more overbought and oversold signals. Or some traders also increase their settings, so to 20 or something, and that will decrease the sensitivity on the RSI. But for me personally, I do prefer the 14. So anyway, look, we've broken the lower low at this point here. Now we can draw this trend line. Look, it's out of whack, isn't it? Look, does this trend line make sense? Now, look at all of this price action. Look how far it's gone. Look how unsymmetrical, unsymmetrical. Look how unrealistic it looks when price reaches here. But look, it does react, right? It does indeed react. So I hope you're getting what I'm trying to put across here, guys. Look, we can also draw another trend line here from this point here to this point here, which did get a nice reaction at this point here as well. But then we broke above this, giving us a signal that the buyers are looking to come into play. Okay, let me just erase these drawings and move forward. Okay, let's move forward. And here we have just more trend line studies, okay? I'm pretty sure you can see this by now, given the amount of information I've handed over. You can also look at correlations. Just let me go back to this example. So this is the pound dollar. Now, most of us will know that the pound dollar and euro dollar, I hope you can see this screen still, guys. This is my trading view charts. And it shows the euro GBP at the bottom. This is the correlation coefficient of the Euro GBP against the pound dollar. As you can see, it's a heavily bearish market. Sorry, it's a heavily inversely correlated market. So what this means is when the euro pound drops, the pound dollar tends on average to rise. So with knowing that, we can use that to our advantage. So if we know we're looking for a long position on the 19th of January at this trendline support, knowing we have confidence, we can then switch over to the euro pound. Now, look at the euro pound. I hope you guys can see my charts still. I'm on the euro pound H1 chart. We have a trend line support in play as well. So this adds confidence to our trade. A H1 trend line support at the same time. So look, if the euro pound drops, the pound dollar should rise on average. In addition to this, we also have overbought conditions in play. And yeah, this is just something you should really quantum. What is H1? H1 is the time frame. So H1 is consists of 60 minutes. So it's a 60-minute chart. So we have the time frames. Look, I think it would be good if you just maybe just Google searched what is time frames. That would help you a lot more. It offer you a more definitive explanation of what a time frame is. So you have the M1, M5, M15, M30, 30 minutes. So every 30 minutes, a candle is produced. Every hour, a candle is produced for the H1. Okay, so are we all? I think we're all clear with the euro pound correlation with the pound dollar. And look, guys, this is really just more drawings. As you can see, the pound is quite receptive to trend lines. I'm not really going to go over all of this, but this is something I would encourage you to maybe investigate in your free time. One other thing I would like to point out is the US dollar index. Now, this is the weekly time frame of the US dollar index. Now, for anyone that's unaware, the dollar index is calculated by factoring in the exchange rates of 6 major international currencies, which include the euro, the Japanese yen, the British pound, the Canadian dollar. I forgot the Swiss. The Swedish krona and the Swiss franc. But the euro is by far the largest component of the index, making up around, I think it's 58%. So what the main point I'm trying to get across here is you can also use this to help forecast your analysis. So for instance, as we can see now, so someone made a comment about the US dollar going up. Yes, as you can see, the US dollar is certainly going up, right? I don't think anyone will doubt that looking at this. But look, as you can see, we are hitting resistance right now, a form of resistance, right? So what we could see is the US dollar pull back. Now, if this US dollar index pulls back, what this means is there's a high chance that the euro dollar will increase. So it's an inverse correlation. It's just something to be. So look, if the Dixie is at resistance, this could mean an overall weaker dollar, and by extension, a strong euro, Japanese yen, and pound, for example. Though do be aware that other factors, of course, come into play, not just this inverse correlation. Can we use trend lines with the Fibonacci? 100% you can, Vivian. I do that regularly in my market analysis. I'm a big fan of Fibonacci studies, especially Fibonacci clusters, which essentially means, I'm sure you're aware, is where multiple Fibonacci ratios converge at 1 point on the chart. Question from Sunil: how useful is using zigzag indicator in MT4 for higher highs and lower lows drawing? Yeah, look, some traders do that. Not many experienced traders will do that. I think it's mainly for the newer traders to get to focus their eye. But look, guys, my advice is train your eyes to understand price action. Don't rely on indicators. So look, the indicators are a derivative of price, right? I'm not talking about the zigzag indicator because that's really drawn. It's a coincident indicator almost. It's drawn with, I think it is. I'm not sure. I know what the zigzag indicator does to the chart. It just basically I think you have settings with the zigzag indicator as well, so you can increase the sensitivity and decrease it. Look, just for me personally, I would always just try to train my eye to understand the higher highs and lows and things like that. Because look, ultimately, all indicators are a derivative of price action. So it's a derivative of price action. So train your eyes to understand how to spot these. Look, guys, there are no shortcuts with trading. There are certainly no shortcuts. And if you try to take a shortcut, the market will put you right. Eventually will put you right. So yes, be very, very careful. We're trying to take shortcuts with indicators and things like that. Spend time understanding the market you're trading, understanding the strategy you're trading. You should understand your strategy inside out. You should understand the components of it inside out. Yeah, so let me just spin things back to the screens. Okay, Q&A. I think I've answered most of the questions already, I believe. If there's any more questions, please do fire away and I'll try and get around to them now. Other than that, look, if you have any comments or feedbacks regarding today's session, look, please do use this email, okay, these emails, marketanalyst@fpmarkets.com or support@fpmarkets.com. We're here to help. Anything I've spoke about in the presentation, do understand this is a live presentation, so I may have made mistakes if I've with some of the content. If I have, point me out on it, and I will happily talk about it with you and through email. Let me just check if there's any questions. I see the chat box going. Excellent. You're very welcome, James. You're very welcome, Uga. Yeah, so look, guys, please do use this email. I find that some traders do use it and I reply and I never hear from them again. I'm here to help. Obviously, I can't give you direct advice of where to buy and sell, but I can help you with your analysis and with things like that if you're struggling with the trend lines and things like this. So yeah, we're here to help. Obviously, if I will reply when and if when I can, not if, when I can. And then yeah, so it would just help your can I recommend any references? Do you mean trading sites learning? Look, we've got a truckload of articles on with FP Markets. With FP Markets, books. Look, to be honest, I've most of my work, I'm just looking at my CMT books on the floor actually next to my desk. Look, most of my understanding of technical analysis was really developed by the CMT books. I think Edwards and McGee was a big one in there. So they're very good books for technical analysis, but most of my work did come from the CMT program. So, but look, for trading psychology, I can wholeheartedly recommend Mark Douglas. If you're interested in the psychological mindset, definitely purchase that book. Trading in the Zone by the late Mark Douglas. Edwards and McGee, I think they've got very, look, there's a lot of helpful stuff out there, to be honest, but most of my work has come from CMT, unfortunately, so I can't really give you a direct book. So I've not really had to purchase any books other than the CMT content, really. But yeah, for Fibonacci, actually, for Fibonacci trading, if you're interested in that, there's a gentleman called, I think he's Robert Kane, Kane Trading, if you look at that, and also Caroline Broden, I think her name is. But that's how I learnt how to apply correct Fibonacci studies. You'll find so many traders, they apply it incorrectly. So yes, they were very good books, and they really helped decipher between what a Fibonacci projection actually is and an expansion, because you get so many traders that believe that they're the same thing when they're definitely not. Yes, so that would be my recommendation. What about when the market is sideways like lately? Do trend lines work, or do we assume no trading by trend? Whoa, what markets are you looking at? Because the markets have not been trending. The markets have been seriously trending lately. You're not talking about currencies, are you? Or because the markets have been in a strong downtrend on the daily time frame. Okay. There's a clear trend on the dailies. Look, to answer your question though, in terms of range, so for instance, if the market is doing this, what you can do if you're looking at the daily chart, you can actually simply, imagine this is your range. It's not a perfect range, but imagine that. What you can do is then drill down to the lower time frames. If you want to trade the, say, let's go for the M30. Let's go for the M30. Now we have trends, right? Remember, the market is fractal. Okay. So let's zoom out. Let's go back to that. Oh, sorry, guys. My screen's not. Of course it's not. I'm on this. Sorry, I've moved it over. Just give me a minute. Here we go. Right, let me just go back to the daily chart. So look, I highlighted this range. Thanks, James, for pointing that out. So look, I highlighted this range, although not perfect. This is the euro dollar. Look, what you can do in a ranging environment, if you really, really want to trade with trend lines, you can just simply go down to the M30. And look, here we have trends, guys. Remember, the market is fractal, right? The market is fractal. Let me go back to, where's that range? So within the 30-minute time frame, oh dear me, where's that? There we go, it's here. Oh, it's not even showing. But look, you can see within the ending part of the range, you have trends to play with, right? All right, so there are, you can just, my advice would be go down to the lower time frames if you're willing to trade lower time frames. How low would I go time frames personally? Again, look, guys, this is up to you. This is not something I can answer for you really, because it's what you're comfortable with. I actually like the 5-minute time frame. I do trade the 5-minute time frame. It's a very, very specific strategy, and it's quite a complex strategy where you have to really understand what's going on with price action. Yes, look, you can exactly that. Me too, M5 for the and then you can use the higher time frames for direction. From James, you'd have to move very fast at 5 minutes. Yeah, you would say that. Let me just show you something. Okay, so for me, let me just try and find a setup. All right, so this is off the cuff, bear in mind. So I'm not going to, I'm just trying to find a setup. So look, the main point I wanted to get across really was this. When you say M5, you have to move fast. Yes, if you're buying and selling every swing, yeah, maybe even, yes, you would. But the traders that I know that trade the M5 are very, very patient, very, very disciplined. So those two components, they're not in on every swing. They analyze the price action and they understand what's going on the bigger picture. So they know where they are. All right. So for instance, if I wanted to trade this area here, and imagine I wanted to short this resistance here. Okay. Look how long. So 27th, 28th, this is today, right? So this is today. I would have projected this yesterday. So yeah, when you say you have to move very fast, it depends. I suppose if you're scalping and you're taking hundreds of trades a day, then yeah, you would. But for me, day trading or intraday trades, look, some days I don't take trades. I'm just too busy with other things. And sometimes there's no trades to be had. A position to be flat is a trade in its own because you're conserving your capital and you're following your plan. And that's how trading should be. Not in and out, off the cuff. It's a disciplined, almost boring process. When I say almost, it is boring for me now, but it's something that generates an income and something that many of us do want to reach. It's called consistency, right? But it took me years. As you know, I've been in this game for 12 years now, and it took me years before I started seeing any improvement. And when I say years, I'm talking about years of frustration. And a big point was accepting that you are going to get losses, right? So you will get losses, and no one likes to lose money. And couple this with losing money and being wrong. How many of us like to be wrong? Really? We don't, do we? We're humans. We don't like to be wrong, and we certainly don't like to lose money. So you have to deal with those two components all at once. And what happens then? If you're inexperienced, is you jump back in the market. You're you're committing what's called revenge trading, and that's a vicious cycle. You lose money. That's part of the business. Now, Antti, that's not a setup on the M5. So I was just trying to show James that you don't have to be in and out and act fast. I was just trying to give an example, really. There's no setup there. All right, so guys, look, as I said, any questions, any comments, please do fire them over to the suggested emails. But if you want a quicker response, marketanalyst@fpmarkets.com. Yes, look, we are P3G3. We are looking at psychology webinars. I think there's already one in the archive. Please do check that out. I think it's quite recent as well, where I go over where I basically take all my knowledge from the book of Mark Douglas. So look, check that out in the archive of at FP Markets, or yeah, that's the only one I have at the moment. But yeah, we will try and include more as we go forward. Look, so on that note, thank you all so much for taking the time out of your day to be with me, and I hope you gained something from today. As I said, guys, I'm here to help. Emails there. Please do send over an email if you're stuck with anything and need a helping hand, if you will. Also, as you can see in the chat box, please do consider signing up to our Telegram channel. Look, it's where I post daily setups and things like that, and market analysis and performances and things like that of the market. And yeah, so, thank you from Nepal. Wow, very cool. You're very welcome. So have a great day, and I'll catch you all very soon. Thank you very much.